Welcome to your ultimate guide for buying your first home in 2025. Whether you've been dreaming of homeownership for years or just started your search, this video is your all-in-one resource to navigate the process with confidence. From financial prep to market trends, mortgages to moving in, we're breaking it all down, step by step. Let's start with the foundation of any home purchase: your finances. Before you even think about browsing listings or attending open houses, you need to assess your financial readiness. Most lenders in 2025 are looking for a credit score of at least 620. Some may go lower, but better credit means better interest rates and more flexible loan terms. Also important is your debt-to-income ratio. How much of your monthly income goes toward debt payments? Lenders typically want this to stay below 43%, though ideally you should aim for 35% or lower. This tells lenders you can afford your monthly mortgage payments without financial stress. Next, let's talk savings. You'll need money for more than just your down payment. Closing costs, moving expenses, and even furniture or repairs can add up quickly. Experts recommend having a separate emergency fund covering 3 to 6 months of living expenses, even after buying the home. Speaking of the down payment, many first-time buyers still believe 20% is required. That's not true. In 2025, most buyers are putting down between 5 and 10%, and some qualified borrowers may even qualify for as little as 3% down through government-backed programs. However, if you can manage a 20% down payment, you'll avoid private mortgage insurance in the US or CMHC insurance in Canada. Now, let's explore the financial help that's available. In Canada, the First Home Savings Account lets you save up to $40,000 tax-free toward your first home. Couples can double that to $80,000. There's also the RRSP Home Buyers Plan, which allows you to withdraw up to $60,000 from your retirement savings tax-free as long as it's repaid over time. In the U.S., several states offer down payment assistance and mortgage credit certificates, tax credits that let you claim a portion of your mortgage interest each year, up to about $2,000. And in the U.K., the Mortgage Guarantee Scheme has been extended, allowing you to buy with as little as 5% down. Once you've sorted your savings and assistance, it's time to get pre-approved for a mortgage. Pre-approval gives you a clear budget range and shows sellers you're a serious buyer. It usually involves a credit check, verification of income and employment, and a quick look at your financial history. Pre-approvals are typically valid for 90 to 120 days, which gives you time to shop without worrying about fluctuating rates. You can go through a bank, but many buyers in 2025 are choosing independent mortgage brokers who can shop multiple lenders and potentially get you better terms. Some also guide you to programs and creative financing options, like rate buydowns or shared equity agreements. So what's the market like in 2025? Well, it depends on your location, but we are seeing some big trends. Mortgage rates have stabilized around 6.5% to 7%. They're still higher than they were a few years ago, but not as extreme as the spikes we saw in 2023 and 2024. More sellers are offering rate buydowns or concessions to make monthly payments more manageable. Housing inventory is still tight in many areas, which means prices haven't dropped much. But the pace of bidding wars has cooled, and many markets are shifting slightly in favor of buyers, especially those who are well prepared. Your next move is to research neighborhoods that match your lifestyle and budget. Look at recent price trends, local schools, access to public transit, and any upcoming developments. Decide what matters most to you, whether that's walkability, commute times, or a big backyard. Knowing your priorities helps you act fast and confidently when the right listing comes up. Once you find a home you love, it's time to make an offer. And here's where things get interesting. Negotiation in 2025 isn't just about price. Many buyers are securing seller concessions, Things like closing cost coverage, repair credits, or even temporary interest rate buydowns. These perks can make a big difference in your affordability over the first few years. Of course, you'll still want a competitive, well-documented offer. A pre-approval letter, a clear understanding of market value, and a flexible but firm approach go a long way in getting your offer accepted. Assuming the offer is accepted, you'll enter the closing process. This typically takes 30 to 45 days. During that time, you'll finalize your mortgage, complete a home inspection, possibly renegotiate based on repairs, and pay closing costs. Those costs usually range from 2 to 4% of the purchase price and include legal fees, taxes, and other administrative charges. After closing, you get the keys and the responsibilities. Set up your utilities, update your address, and review your mortgage documents carefully. Understand your payment schedule, interest rate type, and penalties for early payoff, if any. Then, think long-term. Budget for ongoing costs like property taxes, maintenance, insurance, and emergency repairs. These can sneak up on new homeowners, so it's smart to set aside funds every month. Now let's talk about some 2025 specific opportunities. More people than ever are turning to intergenerational support, with nearly 1 in 4 Gen Z and millennial buyers getting help from parents or co-signers. It's called the NEPO buyer trend, and whether you agree with it or not, it's one way people are navigating affordability challenges. Another opportunity in 2025 is homebuyer education programs. Many lenders and municipalities offer free courses or webinars, and completing one might qualify you for better loan terms or added assistance. These programs often walk you through topics like interest rates, home maintenance, and legal rights. And don't forget to consider your long-term goals. Buying a home is more than just a financial transaction. It's a lifestyle decision. Ask yourself, will this home work for me in 5 years? 10 years? Is it near the things I need? Will I still want to live here if my job changes or I start a family? To wrap up, let's review the key steps. Step 1. Check your credit, debt, and savings. Step 2. Explore down payment assistance programs based on your country. Step 3. Get pre-approved for a mortgage with a trusted lender or broker. Step 4. Shop smart. Know your priorities and research neighborhoods. Step 5. Make a strong but flexible offer. Use seller concessions to your advantage. Step 6. Close with confidence. Understand your documents, costs, and responsibilities. Step 7. Plan for the future. Maintain your home, budget wisely, and keep building equity. If you're a first-time home buyer in 2025, you're stepping into a market with challenges, but also with powerful tools and support systems. With preparation, the right team, and good timing, homeownership is absolutely within your reach. Thanks for watching. If this guide helped you, please like the video, leave your questions in the comments, and subscribe for more helpful content on home buying, mortgages, and financial planning. See you in the next one.